Horwitz is standing by. He's out there on the floor of the trading going on in Chicago right now at the CME Group. And Todd, thanks for joining us today. Wanted to check in with you and see what the latest is on this grain trade today, because it has some folks kind of scratching their heads. How can we rally when we're in the middle of harvest? Explain that, could you?
Well, sure, because we came down to support levels, and it was only natural that we'd get a rally. If you take a look at the technical side of the trade here, every time we've come down to support, we've gotten a nice little rally off of it. And again, I don't see any reason for that to switch. I think that's going to be the continuing theme. As you know, I'm still bullish the grains, especially when they come down to good levels of support. And I think we saw them yesterday, especially in wheat. And once we got the pop, of course, wheat has been kind of the one by itself anyway. But again, anytime we get down to these lower levels of support, I think the charts and the technical indicators are indicating that that's where you want to be purchasing or getting involved. And I think we've seen exactly what we would have expected from here.
Well, I mentioned that on our commodity wrap show that airs on Rural Radio, Sirius XM 147 this morning, that if you look at a long-term chart on the wheat and maybe a 5-year chart, boy, that is one long tail on that dragon, isn't it?
But, you know, it is. It's funny because, you know, wheat was actually, believe it or not, wheat was actually the first indication that the actual stock market was in a collapse way back then. But, you know, again, you have to take a look at what you have. And when you come down to the shorter time frame and you go back and look over the last few months, we are finding just a good solid spot to jump in. And that's what, you know, and that's what I heard you talk about this morning in XM 147 as well. You know, you're talking about these things, and that's what we want to look for is reasons to buy. I think you have to take the model of risk versus reward if you're a trader and say, what's the probability? The probability, yeah, I could go lower. I could buy here and lose money, but, you know, am I going to go a lot lower? Probably not. There's a greater chance that I'll go higher. There's a greater chance that something will happen in the overall economy or something will happen during the harvest. There's a lot of things that can happen that would make these prices go higher. There isn't much more that could happen that could make these prices go much lower. So that being the case, I want to look to be a buyer until that scenario changes. And at these price levels, I see no reason for that to change.
Todd, I have to give you kudos. You've been saying that for a long time, and it finally came around and proved you right. So kudos to you on that deal. Let's review the prices here up to the minute before we head into the break. Let's start with corn. And for the viewers out there at home and the listeners on Sirius XM 147, we have December corn 1.5 higher. It's trading at 382. On the soybean trade, we have new crop November now 4 higher at 856 3/4. In that wheat trade that we were talking about, we currently have Chicago December up 11 1/4 at 506 3/4. In the Kansas City, excuse me, December now 12 higher, right at $5 exactly. In the Minneapolis wheat trade, spring wheat, we have December up a dime at 527, well off of our low by over 11 cents now. And in the cotton market, as we head to the break, we have December new crop cotton still struggling. It's down 3 points, not a big mover at all, but it is under 60 cents. We're at 59.97 right now. That's the latest on the crop markets. We'll talk about livestock when we come back with Todd Horwitz right after this.